Welcome back, everybody. Ready for another deep dive?
Absolutely. Always ready to dig in.
Well, today we're taking a close look at Cyient.
Dang.
Yep, they're a global engineering and technology solutions company. They're doing some really interesting things. Imagine you're about to walk into a meeting
Oh, I know that feeling.
with a big client, and you need to sound like you're in the loop on everything about Cyient. Think of this deep dive as your cheat sheet.
I like it. So what are we working with?
We've got a good bit of info, their Q2 FY25 earnings report, the investor presentation, and even the transcript from the earnings call.
Nice. So we'll be looking beyond just the numbers. Should give us a good sense of their overall strategy.
Exactly.
Yeah.
And there's some surprises in here, too. We'll be talking about a strategic divestment acquisitions in some unexpected industries and their big move into semiconductors. It's a lot to unpack, so let's dive right in. Starting with the financials, their revenue from digital engineering and technology, that's DET for short, grew a solid 25% year over year.
25%. That's a pretty healthy jump. What's driving that growth?
Well, a big chunk of it came from a large domestic defense order. That's not their usual pattern. They typically have a stronger export focus.
That's interesting. So is this a one-time thing, or is it signaling a shift in their revenue mix? Something to think about.
Definitely something to keep an eye on. And then there's their cash flow. They reported 100% conversion of free cash flow to reported profit after tax.
Wow, that's impressive. A very healthy sign if it's sustainable. Want to watch if that continues.
Absolutely. But here's what really caught my eye. Their debt is decreasing. Seems like a good thing, right?
On the surface, yes. But it seems a bit counterintuitive. They just acquired Alltech Electronics and have these big ambitions in the semiconductor space. Those both require capital, right?
Right. So let's talk about Alltech. They're a US-based electronic manufacturing services provider. Basically, they help companies build their electronics.
Okay, I'm following.
What makes this acquisition so interesting is that Alltech has a strong presence in the medical and industrial sectors. It helps Cyient branch out a bit. Historically, they've been very focused on aerospace and defense.
Right, and that concentration can be a bit risky. If one sector takes a downturn, it can have a big impact.
Spreading the bets makes sense.
Yep. Plus, Alltech brings its own clients to the table and strengthens Cyient's position in the U.S. market. I wonder if this acquisition could be a response to the nearshoring trend, too. Lots of companies want their suppliers closer to home these days.
That's a really good point. It's like setting up shop right in your customer's backyard. Speaking of strategic move, they also invested in Azimuth AI. Now, Azimuth is an embedded silicon product company specializing in designing chips for edge computing. I know semiconductors are a hot topic, but edge computing, what exactly is that?
Okay, so think of it this way. A lot of data processing happens in huge data centers, often far away from where the data is actually generated. Edge computing brings that processing power closer to the source of the data, right at the edge of the network.
So, at the edge of the network.
Yes. It's super important for applications like self-driving cars, smart factories, maybe even things like your smart refrigerator. They need to process data in real time without relying on a data center that could be miles away.
Ah, I see. So Cyient is betting on edge computing then with this investment. But here's what I don't get. They just bought Alltech, but they also sold off part of Cyient DLM, a 14.5% stake. Why sell off a piece of the company when they seem to be on an acquisition spree?
It's all about where the money's going. They're using the proceeds from the DLM divestment to fuel more growth in the semiconductor business, both organic growth within the company and potentially even more acquisitions. And they're also using some of the money to pay down debt. So it seems like they're really carefully planning, making strategic moves for the long term.
They're playing chess, not checkers.
Exactly. And it looks like their next move is taking them to the Middle East. They have established a dedicated entity in the UAE and acquired ADGCE, a company that operates mainly in the energy sector.
Interesting. Why the Middle East?
Well, ADGCE is heavily focused on energy, which aligns really well with Cyient's existing expertise in sustainability. Think renewable energy, energy efficiency, all of that. It seems they want to be a big player in the energy transition, especially in a region like the Middle East where energy is such a huge focus.
Makes sense. Planting their flag in a region that's ripe for growth and sustainable energy. But let's not forget about their core business. How's their order book looking?
Well, that's where things get a little tricky. Their order book has actually been declining over the past few quarters.
Oh, what's causing that?
Management mentioned a couple of things. Some large projects have been completed, and clients are taking longer to make decisions. But they're saying they have a strong pipeline of potential deals and are optimistic about a near-term recovery.
I guess we'll see. But what really jumps out at me is how concentrated their revenue is. A big chunk of it comes from their top 10 clients. That seems a bit risky, don't you think?
It definitely raises a few flags. If a couple of those big clients were to have problems or go elsewhere, it could have a pretty big impact on Cyient's revenue.
Exactly. So what are they doing to mitigate that risk?
Well, that's where their move into semiconductors might actually help.
How so?
By developing their own chips, they're not as reliant on external suppliers. It gives them more control over their supply chain, and it potentially opens up new revenue streams. It's a bit of a gamble, but if it works, it could be a game changer.
A semiconductor gamble, huh? Sounds like we need to dig into that a bit more. So Cyient is making some big moves in semiconductors, but can they really compete with the big players in this industry? I mean, it's tough business.
It is. It's not just about designing chips. You've got to deal with the global supply chain, and that's been, well, a bit crazy lately. Think chip shortages, all those geopolitical tensions.
Yeah, those headlines are everywhere. So how is Cyient tackling those challenges?
They seem to be pretty aware of the hurdles, at least from what they said on their earnings call. They're diversifying their sourcing, so they're not putting all their eggs in one basket, so to speak. They're also forming partnerships with key players in the semiconductor world, manufacturers, suppliers, even potential customers. And a really important point, they're focusing on areas where they already have an advantage.
So they're playing to their strengths, choosing their battles wisely.
Exactly. And I think their focus on Azimuth AI is a good example of that. Remember, Azimuth specializes in chips for edge computing in the energy and industrial sectors. They're not trying to be everything to everyone in semiconductors.
Carving out a niche, I like it.
Yeah.
But what about the financial side of this semiconductor venture? Can they really afford to play in this space?
That's where their financial maneuvering comes in. Remember, they sold off part of Cyient DLM. That wasn't just about trimming down. It was freeing up capital for their semiconductor ambitions.
So they're shifting resources, making a big bet on the future of this technology.
Right. And remember, this semiconductor play isn't happening in isolation. It connects to their other moves, like their expansion into the Middle East. That focus on sustainability and energy solutions in that region fits in perfectly with their semiconductor ambitions.
Now that you mention it, it does seem connected. Imagine them designing chips that can make smart grids more energy efficient or power electric vehicles, like combining different ingredients to create something new.
Exactly. Finding synergies and using them to their advantage. But let's not forget their bread and butter, their core EMS business. How's that doing with all these new ventures going on?
We did talk about their declining order book, which is a bit worrying. It seems their EMS business is facing some challenges, especially in the industrial sector.
True, but they're not just standing still. They're expanding into new sectors and geographies and focusing on high-value, mission-critical solutions. Those are harder to copy and offer more value to clients.
So they're moving from selling basic tools to providing custom-built solutions, tackling more complex challenges.
A perfect way to put it. And they're also investing heavily in their digital capabilities. Things like intelligent platforms, AI, automation. This helps them streamline their operations and offer more sophisticated solutions to clients.
So they're future-proofing their core business while venturing into these new areas like semiconductors. That's a lot to juggle.
It is, but if they can pull it off, the payoff could be huge. It's like building a bridge to the future, using their existing strengths as the foundation.
Sounds like Cyient is at a turning point. Big bets, diversification, embracing new technologies, but also facing some real challenges.
The next few quarters will be key. We'll need to see how their order book, their margins, and their progress in semiconductors all play out. But one thing's for sure, they're a company to watch.
They're definitely keeping us on our toes, that's for sure. But that's what makes these deep dives so interesting, peeling back the layers and seeing how things unfold.
And that's what makes it relevant for you, the listener. Investor, competitor, or just someone curious about engineering and technology, Cyient's story offers valuable insights into the trends shaping our world.
All right, before we wrap up, let's zoom out and look at the big picture. In the final part, we'll explore Cyient's long-term strategy, their plans for that order book, and what it all means for you. Stick with us. All right, we've gone deep into science, financials, acquisitions, even semiconductors. Now, what's the big picture? What's their long-term plan, and how does it all relate back to us?
It's impressive how they're pulling all these different moves together. It's not just reacting to the market, they're really shaping their own future.
It's like they're building their own ship instead of just trying to stay afloat on someone else's.
Exactly. And that ship's built on digital transformation, smart expansion, laser focus on high-value stuff. Let's break that down.
Okay, let's start with digital transformation. We've talked about the investments they're making in platforms, AI, automation, but how does that translate into real benefits for their clients and ultimately their bottom line?
It comes down to being efficient, being agile, delivering results. Embracing digital tools lets them streamline their operations, speed up design and development, give their clients those real-time insights and data-driven solutions. And all that leads to better profit margins.
So they're not just chasing the latest tech trends. They're using tech to become a better partner for their clients, more efficient, more responsive, delivering more value.
Exactly. And that focus on efficiency and results connects to their expansion into the Middle East and their energy sector play.
You're right. They want to be a leader in that global energy transition, providing those engineering and tech solutions for renewable energy, smart grids, all that smart move with all the investment going into those areas.
It's a move that benefits everybody, even if you're not in the energy sector. A more sustainable energy future is good for the planet, good for everyone.
Now let's talk about that elephant in the room, the declining order book. Management sounds confident about a recovery, but what are they actually doing to address this and make sure they're growing in the long run?
They're diversifying their client base. New locations, new industries, like the Alltech acquisition, that gets them a bigger footprint in North America and brings in clients from the medical and industrial sectors. They're also going after new clients in those high-growth areas like electric vehicles and renewable energy.
So spreading the risk, creating more paths to growth, not putting all their eggs in one basket.
Right, and they're not just relying on acquisitions for growth. They're investing in their internal capabilities too, boosting sales and marketing, developing innovative solutions for new markets.
Two-pronged approach, new clients and stronger relationships with existing ones.
Exactly, and it's all underpinned by that move towards higher value solutions, moving away from those low-margin basic services and focusing on areas where their expertise shines through.
They're going from selling basic tools to building those custom solutions for complex challenges.
Great way to put it. And this circles back to those semiconductor ventures. It's a bold move, but it fits perfectly with their long-term goal of providing those high-value solutions in key growth markets.
It's like they're building their own set of tools, so they're not relying on others, controlling their own destiny.
Precisely. And those tools will let them create more innovative solutions for their clients, giving them a real edge.
So what does it all mean for you listening in? Investor, client, competitor, or just interested in the future of tech? Cyient story is a valuable lesson. It's about embracing digital transformation, expanding strategically, focusing on high-value solutions, and taking some bold risks.
It's a story that's still being written too. The next chapter is going to be crucial to see if they can navigate these challenges and achieve their vision.
Well, one thing's certain, we'll be watching, and we'll be back with another deep dive when the next quarterly results come out. Until then, keep learning, keep those questions coming, and thanks for joining us.